Bitcoin just lost the $76,000 support level. RSI is sitting at 37. ETF flows are weak, and we're heading into a weekly close that could either stabilize this market or open the door to something significantly lower. Here's exactly what you need to watch before Monday. This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research before investing. Let me give you the big picture first. Because the tone this week has shifted noticeably from 2 weeks ago when we were talking about a recovery attempt. That recovery attempt didn't follow through. And now the market is in defense mode. Bitcoin has lost a key support level. Ethereum has broken below its rising trend line, which is a technically significant event. And gold is quietly doing what gold does in uncertain times, holding steady and reminding everyone that institutional money has a plan B. The overarching theme this week is caution, not panic, caution. There's a difference. Panic means indiscriminate selling across all assets and timeframes. What we're seeing right now is more controlled. A market that's lost momentum and is waiting for a reason to move in either direction. The weekly close in the next few hours will be the first verdict. Let's break down what that close means for each asset. Let's start with Bitcoin. And I want to be direct with you about what the chart is showing. Bitcoin is heading toward a weak weekly close. Price has pulled back to the 0.5 Fibonacci retracement level, and crucially, $76,000 support has been lost. That's not a minor technical event. $76,000 was the level that held multiple times over the past several weeks, and losing it has shifted the market into a more defensive posture. The RSI is at 37, not fully oversold, but firmly in bearish territory. There's no momentum divergence here that would suggest a sharp reversal is imminent. Selling pressure is ongoing, and the volume data doesn't show the kind of recovery buying you'd want to see at a key support loss. Critical levels to understand right now. The immediate support is at $71,818. That's where buyers are currently trying to hold the line. Above that, $73,925 is the first resistance to reclaim, followed by $76,031 and then $79,030 further up. Each of those levels is now overhead resistance that needs to be reclaimed, not support underneath you. Weekly close scenarios. A close below $74,000 is a negative signal for the market. It confirms that the recovery from recent lows has failed, and it sets up a new week with sellers in control. That's the scenario that increases the probability of testing $71,818 early next week. If somehow buyers push price back toward $73,900 or above into the close, that changes nothing structurally, but it does reduce the immediate downside pressure for the weekly open. Weekly open expectations, volatile start. If we see movement above $73,900 early in the new week, a short-term relief bounce is possible. But if $71,818 breaks on a daily close, selling could accelerate. Right now, this is a sideways to negative setup until the chart proves otherwise. Fundamental backdrop: ETF flows remain weak. Risk appetite is down across the board. Institutional interest is still present, but right now those same institutions are in defensive mode, not accumulation mode. The market knows this, and it's reflected in the price action. Ethereum's situation is actually more technically damaged than Bitcoin's this week, and that's an important distinction. ETH has broken below its rising trend line. That's a structural breakdown, not just a support test, but a break of the pattern that was containing the price action. And on top of that, $2,060 support has been lost. When you combine a trendline break with a support loss in the same week, the technical signal is clearly negative. RSI at 38 confirms weak momentum. And the selling pressure in ETH has been more intense than Bitcoin, which means ETH is underperforming even in a weak market. That's not where you want to be. Support is now at $1,938. That's the next meaningful floor, and it needs to hold. Resistance above is at $2,062, then $2,140, and $2,200 further out. Reclaiming $2,060 is the minimum requirement for ETH to stop looking technically broken. Weekly open expectations. The first reaction zone next week will be $2,060. If ETH can reclaim that level and hold, you might see a short relief period. But a retest of $1,938 is entirely on the table. And if that breaks, the picture gets meaningfully worse. Bottom line on ETH. Bitcoin dominance is rising, altcoin confidence is low. Volume and capital flow into Ethereum specifically are both weak. This is not a market that's rotating into ETH. Until that changes, and ETH is a chart to watch, not a position to add. And then there's gold, which continues to be the steadiest asset in this entire analysis. Gold is holding flat to slightly positive into the weekly close. The $4,466 support level is intact. RSI is at 54, neutral to positive. And the momentum structure remains upward pointing even as crypto weakens. Resistance sits at $4,539, with the next targets at $4,644 and $4,777 if that level breaks. A close above $4,539 this week would be a genuinely constructive signal. A close below $4,466 would invite some near-term selling. But even in that scenario, gold's broader structure is more stable than anything we're seeing in crypto right now. Weekly open expectations, sideways to positive. Gold is the defensive asset of choice in this environment, and that environment isn't changing quickly. What this tells us about crypto, market stress is elevated, safe haven demand is active, and the rotation back into risk assets hasn't happened yet. Until gold starts underperforming and crypto starts leading, the macro backdrop remains a headwind for BTC and ETH. Let me give you the underlying data picture because the charts don't tell the whole story. ETF flows are weak. We've had another week of net outflows or near flat flow from Bitcoin spot ETFs. That matters because ETF flow data is one of the most transparent windows into what institutional money is actually doing, not what it's saying what it's doing. Right now, it's reducing exposure or sitting on the sidelines. Risk appetite is down broadly. This isn't just a crypto story, it's a macro story. Equity markets are cautious, credit spreads have widened slightly, and defensive assets like gold and short-duration bonds are outperforming. Crypto doesn't operate in a vacuum. And when the broader risk environment turns defensive, digital assets feel it first and most acutely. Institutional interest continues on course, but there's a meaningful difference between long-term institutional conviction and short-term institutional positioning. Right now, the conviction is still there from a thesis perspective, but the active positioning is defensive. Large wallet on-chain data shows accumulation in the $71,000 to $74,000 zone, meaning smart money is watching these levels carefully. The question is whether retail follows before or after a deeper flush. Bitcoin dominance is rising, which continues to suppress altcoin performance broadly and ETH specifically. When dominance rises in a falling market, it usually means capital is consolidating into BTC, as the least risky crypto asset before potentially exiting altogether. That's the setup we're in. Here's where we stand going into the weekly close and new week. Bitcoin lost $76,000 and is heading for a weak close. Ethereum broke its trendline and is more structurally damaged. Gold is holding and telling us the macro environment is still defensive. The levels that matter most, $71,818 in BTC. That's the line in the sand. Below it, and selling accelerates. Above $73,900, and there's room for a short-term relief bounce. For ETH, watch $2,060 on the open. For gold, $4,466 holds until proven otherwise. My honest take, this is not the week to be a hero. Caution, defined levels and waiting for confirmation are the right approach in this environment. If this weekly breakdown is useful to you, subscribe and hit the bell. I do this every week, every major close, without hype and without telling you what you want to hear. Like the video if it helped and drop your BTC weekly close prediction in the comments. Stay patient, stay sharp, see you on the other side.